Good morning, everyone. And it says you are live, so I must be. And here we are, 68.50. So just a little context, a little intro, and then we'll get right to it. Last week, as everybody knows, we ended up with a green week, despite all the dramatics of the week before. We ended up, the CPI came in soft. The FOMC quarter point has been cemented in. Everybody thinks, I'm going to say everybody's right. And so then we had the gap up, and here we are. Now, quick cynical comment from my part. So I saw somebody say something like 99% of gaps filled. So what gap is that? This gap they're saying is supposed to fill. I don't know, maybe this gap is supposed to fill. Any other gaps they haven't filled? I don't know. Maybe one down here. I don't know. I'm not a gap fill guy. 6,500 gap, maybe. I don't know if this one's considered filled. But I'm saying all that to say this. I have no idea if the gap is going to fill or not. All I know is where we are right now. Could it fill? Sure. I mean, would it surprise me if we went down 50 points from here or 100 points from here at some point between now and December? Sure, it wouldn't shock me. But just for today, it doesn't look likely. So anyway, here we go. So we had a green week. So over the weekend, we got the China deal news, which I thought was a foregone conclusion, but apparently people pretended that this wasn't going to happen and that all the saber rattling and bellicose threats were actually real. And so anyway, so here we are. So we gapped up. And now we're in this zone. Now let me show you what's actually going on here, quote unquote. And then we'll talk about what's coming up this week, which is a whole nother story, or part of the story, let's put it that way. So let's switch to the church of what's happening now, and we're going to go pray there. Let me get markers. Let's leave markers on. And this is options depth, in case you don't know. And so just a quick review for those of you who are kind of new to this presentation or whatever. To the right is market maker long gamma. To the left is short gamma. We're over here is right now, 68.50. So when market makers are long gamma, they hedge in the direction of the move, but it's mean reverting sticky. So what does that mean? If we go up, they have to sell. Because why? Because they're too long, so they have to sell. But then as we move away, now they're too short, then they have to buy. And so it creates that kind of mean reversion, if nothing else was here but this. Now, there is something else here. So here we have another market maker long gamma node, 5,000 contracts. It's significant, 5,000, see down here. Hopefully you can see. It's significant. And so as we go down, assuming that we do, market makers have to buy, pushes us up. But if we go too far from here, then they have to sell, pushes us down. However, we have a math problem here because there's a certain amount of buying and selling from this, there's a certain amount of selling and buying from this, And it just has to, we just have to see how the math and how everything else works out. What happens if volatility increases, real money sellers profit taking, and or um, underweight portfolio managers jumping in before Max 7 earnings, volatility control funds doing whatever they do. There's a lot of moving parts that we don't see right now yet for today. But gun to my head, as long as we're over 25.30, as long as we're over here, as the day progresses, late morning, early afternoon, then we get sucked into here. 68.60, 68.55. Maybe there's some chance we get above here, kind of doubtful, but possible. 65 maybe. And so that's what's going on right here. Let me show you something else. Now, two other things I'm going to comment on. Okay, so here we are, 68.60. Hopefully you can see the numbers. If not, I'll read them to you. About 1,300 contracts here. At 65, another 600. So it's about 2,000 contracts between 60 and 65. That starts to matter. And we have 2,500 here at 70. And here we have the big boys and girls up at 75 and 80, 10,000, 7,000, 5,000, 7,000. So we have back of the envelope math, 2,500, 12,500, 20,000, 25,000, over 30,000 contracts up here staggered. So it would take, and it's not my math, Vol Sigs, Carson, Dan from Vol Signals did the math. He's a market maker, a former market maker, so he knows what the actual math would be. And actually, you can do the math here. The actual depth gives you a conversion thing. It would take $20 million of real money buying, 20 billion rather, to fight through this. Now, is it 20 billion parked on the sideline to buy through this? I don't know, maybe. It sounds like a big number to me. So, on the other hand, if there's profit taking, and we head down this way, take the red lane, then we have this bounce thing here at 68.25. The volatility increase, a headline, who knows what. Then we get down into the orbit of the 6,800 round number area, where we have another cluster that's supportive. And that's the landscape. That's the story. Now, thrown into the mix just so that you understand we live in interesting times, is we have Mag 7 earnings on Wednesday and some more on Thursday, along with the Trump ceremonial signing of the deal, shaking hands and smiling at each other, two BFFs on Thursday, assuming that there's no more rug pulls between now and then. And, with these two calm, steady people at the helm, there's very low probability of that happening. Pencil in sarcasm. Then we have this new zone that we live in. We have Mag 7 earnings, we have FOMC, we have Trump G, and then to top it off, we have end of the month options expiration, where all this stuff goes bye-bye, along with the JP Morgan collar at 66.50, which was support, and when we broke down was a magnet pulling us up a week or two ago today. And then we go into November and 7,000 but plus for the year end, just like everybody's been saying. And that's the story. Let me see, look at my notes and see if there's anything else. Okay, we know, in case the volatility, 2 panel, we'll look at that. Okay, let's look at this plain one. Okay. So we have VIX down at 15. VIX is no longer a sweet 16. VIX is now 15, heading for its bar mitzvah 13. I don't think so, but it might have had a bar mitzvah once before this year, so maybe you'll have a second one.
Yeah, that's good, Doc.
But sweet 16, we'll see if we can get that again. And the 9-day volatility, which takes into account this Friday and the following Friday. So let's pay attention. So the FOMC is not in this calculation. To the extent that people are hedging the FOMC in the Friday expiry, it is, but it's not in this calculation anymore. And the VIX one day sucks as a measure. I'm not even going to dignify it with putting it up. I put up the 3-month just by comparison, and a 4-point gap is kind of a bit much. I mean, a 4-point gap, the gap is great for us vol sellers. So we'll see, 2-3 point would be plenty. So we'll take a look at that. So let's look at the volatility space. The VVIX won't be calculated until the market opens. And I suspect, well, we were like down in the 90s, high 80s not too long ago, and we might be again. All the VIX buying sellers and all the UVXY guys who bought insurance after the house burned down are gonna say whoops. The put buyers from a week or two ago, if they haven't thrown in the towel yet, will be throwing in the towel, et cetera, et cetera. And that's kind of where we are. Our constituent volatility. Let's talk about that real quick. So this is the so-called famous dispersion trade, where institutions who are smarter than me, or have better algos than me, or fancy people sell index vol, i.e. SPX volatility, selling straddles, strangles, whatever they do, and buy volatility in single names. I think it's the top 100 names. It's not everything in the S&P 500. They have a formula. And going into earnings, that's kind of part of the strategy, and that usually straightens itself out. I haven't looked at it in a few days, but this dispersion is not crazy anymore. Up here at 46, it was a bit much. It was a bit much, and here's the dispersion, it was a bit much. Down here, it's getting into something typical for what we've seen this year. And so everything looks good in the hood. If you're a bull, if you're long, if you came in here, let me find what the heck am I? Which is the there we go, McGraw Substack. That's me. Okay. Yeah, and that's it. Oh, in case those of you people who are watching don't know, I have a Substack where I post my whole daily plan with these levels and lines marked on your chart, and then during the day on the Discord, we talk about it, we come up with ideas, and maybe one day I'll remember to put all the links in here. But the links are in my Twitter and whatever, you can DM me. And now I'm going to turn it over to Bad Hombre, aka Chewy, or Chewy, aka Bad Hombre, probably a better way to say it. And he does the ES scalping room. And here there's a version of it, of the string for ES. I made the numbers small because I don't really mess with the S that much, so I don't want to see it. But I'll make them larger for you guys. Go ahead, take it away.
All right, guys. Today's a bit of an interesting setup for me with my strategy. I'm kind of I'd like to see a push up to call it 6,900, maybe even 6,895. And if we do get that right at open, I'm then going to look for a break of 68, call it 75, 76 for some downside. I think we can see somewhat of a trap of moving up quickly, but breaking below that 68, 78, 77. I think we could get a nice move down to 68, 60. I am.
We have the overnight gap here. So what are you saying in relation to the overnight gap?
I'm personally not even paying attention to the gap itself. Yeah, I just want to see if we can make a new high on ES, and if we can make a new high right at open, which I think is likely, I'm going to then look for shorts if we break below that 68.78. So one has to happen before the other, or it's not valid.
If not, there's no trade. You don't get spend money to spend money.
Exactly. If that does happen, I'd like shorts from that 68, call it 77, down to 68.60. If we can hold below 68.60, I want to see something in the 40s, maybe something down into the 30s. Close that gap.
In the gamma world, that's highly unlikely, but anything
possible. And that's obviously I am looking more upside, but if we do break that 68.78 after the upside move, I think we'll see a kind of a dynamic shift, at least during lunchtime.
Now, from a scalping point of view, whether it's ES or SPX, from the gamma point of view, the best case scenario would be whatever, you go up somewhere near here, stall where we have this massive $21 billion worth of gamma, so it'll be unlikely to get moving, and then get the pullback, reversion back up, pullback, reversion back up. But as long as we can stay above, say, 75, little dips could be bought for little scalps.
Yes, that's my plan A. And if we do start to see that reversion, then plan B comes into play to the downside. But
go
ahead.
So for those of you that don't know, Chewy does a course in whatever, ES scalping, whatever, and correct me if I'm wrong, it's partially geared toward people who are trying to get their prop trading thing. I know a lot of people who do that. So I know people who've done it successfully, or who've tried, or who've taken the course or paid the entry fee 72 million times and failed until they finally did. Correct me if I'm wrong. Part of the not waiting, not taking a trade just to take a trade, but to wait for the high probability setup is something that people who are doing that need to learn, because you can't afford to have too many losses, from what I understand. That's not my world. I've never done it, but do I have it right?
Yeah, that's exactly right. So I teach anyone who's wanting to learn how to trade as almost like as a systematic approach. However, if you are trading prop firms, a big thing you need to learn is high risk or low risk, high reward. And my strategy is really good at being able to, cut a small loss for a potential big win. So if you are trading prop firms, it does help you pass relatively quickly.
Right, they have those tests or those whatever those markers that they have to.
Yeah, And I mean, we've had pretty good success with, I'd say really good success with some of the students who already took it. Two of them have just finished, and they're already having really consistent green days, over $500 on average. So pretty good results right out the gate.
That's good. And we'll put the links in for all that.
And for anyone wanting to just try out the futures chat, where I'm sitting there scalping NQ with everybody, just ping me and I'll give you a trial in the Discord.
There you go. Good idea. Let me see. Okay, now I want to put mental Q's levels on there, and I have a discount link for mental Q as well. I just wanted to do a quick round the horn on some of the Mag 7 names. You know, there are people that trade something other than SPX. Even me, I trade other things a little bit too. Okay, so no shock. Apple is up. Let me just go down like the hit parade. Adobe, Adobe just can't get up its own way. I'm sorry. I had a conversation with a buddy over the weekend. I was saying, you know, I think Adobe is undervalued here, whatever. And he's like, what do you need Adobe for anymore? That's like, it's a dinosaur. So I don't know. There you go. See that? Thank you. Amen. Amazon. That Amazon was an easy trade that I took. Some people took. I thought it was an easy trade. Amazon was the lagging. I think still is the lagging Mag 7 name. You know how much it's up year to date versus the other folks, and so now it's already kind of at the. But you know, let's still got room to go here. Let me make a 65-minute chart. And where's the little squiggly thing? Okay, yeah, see, down at the 220s a couple days ago when AWS didn't work, as if that was going to mean anything for more than a day. Like CrowdStrike and Microsoft had this major breach, and they sold off and they're back to all-time highs. I mean, come on, give me a break. How many times do you have to see this movie before you know how it ends? Let's see. I'm interested in Baidu. There you go. Yeah, I'm long Baidu shares, and I sold puts. I didn't buy the options yet. Baidu, if you remember, had a nice run earlier in the year. Then it pulled back for whatever reason. It pulled back, and so here we are. And I think 150 is a reasonable target longer term. You know, I would look at maybe a January swing. Let's see, CCJ. I'm always interested in uranium, and most people are. Okay, I like the setup here. Oil, I have a slash CL trade on. It's finally off the bottom here. I just closed out an oil trade. I don't have anything right now, so. But oil, I don't trade like you guys. I sell strangles or 112s and just get paid and let it decay and then close out each side. Other names of interest as I go through this list: Dr. Copper, SPX, IMHO, it's still in a viable range. Longer term, they need copper to build all the data centers and stuff. I mean, it was nice in the 30s. You know, if I can get it with a 3 handle down here, sell some puts and see if it can get put to me. How's China reacting on the news? Okay, gap up. Now, remember China went crazy earlier in the year? I don't know if my chart goes back. Okay. Gold. Now, the whole gold trade is interesting. As a quick reminder, gold did this double top at all-time highs here. And then on Friday, see what happened is, and gold futures options are even a little funnier than real options, or that not real. Futures options just trade differently, different volatility, they act different. But either way, this was a crowded trade. And then that Friday, when the market was tanking and everybody was buying gold as a safe haven, and there was a lot of options in there that Friday that for the end of the month that expired. Market makers released their hedges. Down goes Fraser. Gold volatility came in, and here we are. So I don't know how much of the gold trade, quote unquote, is real versus macro hedge fund positioning and all that. I don't trade gold. I usually get it wrong when I do. So I don't know. I'm not gonna give any. I know that my opinion is just making stuff up, so I try not to make stuff up. So I'm just showing you the landscape and telling you what I know. I'll let those people that maybe could trade it technically, macroeconomically, or the structurally. There's a lot under the hood. Google, all-time high. Remember when they were killing it? It was down to 140 because OpenAI was gonna make Google obsolete. It wasn't too long ago. Okay, Home Depot, the housing. Okay, so I wrote a piece, I put it on Substack, and I put it on Twitter about housing. Basically, not rocket science. Mortgage rates go down, housing market gets some buyers. People start to, below 6%. People start saving $400 a month. It's worth it for them to refi. So refi companies, housing adjacent companies, Home Depot, Lowe's, all those people, plus the housing stocks. Okay. IBM, if anybody whoever grabbed that drop after earnings on that bad Wednesday or Thursday, whatever day it was a happy camper. Software is still having trouble getting out of its own way. It's actually done a little better though. IWM, all-time highs. The regional bank scare from like loans going bad. I went long around here. Shares, so puts. I don't have calls. Oh, Bitcoin. How can I miss Bitcoin? Bitcoin had that massive sell-off, and I like where it is right here, right now. I think so. I don't trade those commodities, but it makes sense to me. I mean, it makes sense. It makes sense that it would. I have a buddy that trades commodities. I'll ask him what he thinks. Two buddies. One of them actually is like a former hedge fund guy. Now he's retired, too rich to do it. He actually did like oil hedge funds for like some Arab countries and in Texas, whatever. But he knows all about the commodities and the curve, and commodities have a way different curve than options. So I just ask him. I'll ask him what he thinks about soybeans. I'll let you know. I know what I don't know. Netflix, is it time to get into a Netflix trade? I don't know. It's below its 200 MA for the first time in a long time. Let's do a daily chart. Whoa, that looks good, huh? Let's do a daily chart and let's put some moving averages on this thing. There's its 200 MA. Curling MAs, curly MAs. You're welcome. I don't know. I don't have a Netflix trade yet. I haven't traded Netflix in quite a while. I'm just going to see how this plays out. Might be a trade in there at some point.
I don't think
For me, there's a trade for other people whenever. Yeah, go ahead. You want to comment?
Well, I was going to say, I don't think there's a trade in there yet. I was just looking at it.
Yeah. From my former TA days, that does not look like something I want to get involved with.
Yeah.
It does not look like something I want to get involved with, especially on the long side. NVIDIA up, what a shock, going to 200, when, not if. PayPal has earnings this week. I don't have an opinion on it. I read some institutional research that says buy puts in PayPal ahead of earnings. Long story short, I don't know. Reddit flying. I don't really trade this beast. I did a while back. I haven't traded this beast in a while, so I have no opinion on Reddit, but some people like to see it. Let's see, let me just go through the list here. What else do we have? Oh, SMCI. I like this thing. Now, this thing got some bad press a few days ago. I forgot what it was. And so this thing seems to have 9 lives, though. Oh, CoreWeave. I forgot the new poster child. CRWV. These are all the names that, the momentum people like to play. Nothing wrong with that. It's just not my pitch, CoreWeave gapping up. Okay. Anyway, let's go back to Texas Instrument. Also got killed on earnings. As you can see, down goes Fraser. And it's kind of trying to hang in here. I like these guys, these data center energy stocks, whatever you want to call them. I meant to get in here on this drop, but I didn't. I'd be lying if I say I did. I got distracted with some SPX 0 DTE, whatever. By the time I turned around, we were over here, and I forgot it again. I looked on Friday or Thursday, we were over here. I sold some puts down here, saying if they want to give it to me down here, I'll take it, and that's it. LRCX had good earnings. Lam Research, boom. That's kind of it. I'm just trying to see if there's anything else on this list here. Okay, any other questions, comments, whatever? Let's go back to SPX, which I'm going to guess is stuck like chalk. And
yeah, we also don't have a big catalyst today. So,
yeah,
I think we might have a little move, and then I think we're going to be moving sideways for a little bit. So just kind of keep an eye out on that in case that does happen. Waiting for trend can be deadly.
Yeah, and this is the JP Morgan short call collar for the end of the month. It's pretty much play by all the way down here, so might as well remove it. Goodbye. Tesla bounced off that earnings reaction. Looks like it's kind of back in its kind of usual. I guess looks like it's in no man's land here. TTD got smoked on some Amazon news on Friday. Was beginning to try to look respectable. I like this company. I have a few little trades on. UNH is reporting this week. Who else is reporting this week? Apple, Amazon. Well, I mean, guess what? Everybody. Who?
I think a lot of them.
I have the list in my.
So we have Microsoft Wednesday, Meta, Google.
Oh, yeah, we didn't even look at Microsoft. Thank you for reminding me. Let's look at Mr. Softy.
And then Friday or Thursday after close, we have Amazon, Apple, Coin.
Oh, Coinbase, yeah. I don't trade that one, so I forgot. That's another one back. Yeah, there's Microsoft.
It's becoming more and more of a player as it gets bigger. So I think it's worth noting.
Yeah. They've grown up to be a real company. So it's Robinhood. all your generation. And I read something that sounded credible. I can't really vouch for it, but it sounded credible. That what's happening is Bitcoin holders, like the Bitcoin billionaires, quote unquote, and maybe just the cheapy Bitcoin millionaires, are taking their Bitcoin and converting it through some special deal with BlackRock or whatever into IBIT. Why? Because then they can borrow against it. Now it's a regular stock asset. It's an ETF. You can borrow against your SPY. You can borrow against your IBIT. And so there's monkey business going on under the hood to legitimize Bitcoin that way. So, and just me, not investment advice. I like IBIT. I like ETHA, maybe not as a Ethereum ETF, maybe not as a swing trade for today, but for buy the dips, put it away, sell calls, sell puts. It's got decent volatility in it, although it's come down. So I trade around both of these while I'm waiting for SPX to do something. I'm waiting for my iron condors to melt. Speaking of iron condors, let's take a look. On a crazy day like this, what do we do? Well, let's see. Okay, so we know about the levels. What did we talk about? We talked about that. Oh, yeah. What's going on at 68.25 that it's support, so to speak? Well, none other than the IC whale, dubbed Captain Condor by others who found him after me, has 5 wide and 10 wide call credit spreads at 68.25, 30 and 68.25, 35. Okay, so that was supposed to be resistance, quote unquote. Friday's close, we were down here at 90. Friday's close, we're down here. That was supposed to be resistance, but now he's acting as support for us. How do we see that here? Let's go back here. We see that. Let's just go to the. Let's go to this. We see that right here. Here's the short calls. Here's the long calls, the other side of the iron condor, which act as magnets, potentially pulling us down a little should we lose a 40-45 pivot. If that, conditional. And then below, we have all this stuff. So if I'm going to sell iron condors, on the put side, I'm going to at first look and see if I can steal down here somewhere and steal up here over 90. And then I'll I'll calibrate my range. So let's see what we have up here. 90, they're not giving you anything, but 80 seems pretty unlikely. 85 even. I would probably do that. Although this doesn't look bad either, and a 5 wide at 55 cents. I'm going to put that in right here, right now. See me later, and I'll let you know if I lost $500 or not. And okay, and there's juice at the juice bar below 6,800, it looks like. $0.40. I'll take it for a 10 wide. Now I know there's people that like to do 5 wides. And what might be a reasonable 5 wide to do? And still get enough premium. And you have to go kind of close for the 5 wides. You kind of have to go here, depending what you want to get in premium. You might have to go here at 68.15, and on top, you have to dance with the devil. Whoops, wrong. Wrong again. Maybe 75.15, 5 wide for $1, probably decent. If I wanted to be a Cossack, $1.40, a third the width of the spread. I'm going to do one of those. Let's see how that plays out. A third the width of the spread. I kind of like that. And a fly, if I want to look for a fly, I would look. Well, we know we're supposed to stall at 60, right? Something like that for $2 might be reasonable. Or if you wanted a cheapy lotto, something like this for 50 cents. We know we're supposed to stall at 60, so that's kind of what we want to sell. Or sell right near it. Figuring we don't get to 60 on the stall. Something like this. Private chat. Let's see what. Taking the dogs out. Okay. And that's it. What do you think? Should we buy one of these? Poll the audience. I'll put it in as a cheapie for $1. That way I can come back and look at it later. So it won't get filled right away. And that's it. That's what I'm seeing. Non-investment advice, just plain, just thinking out loud. All right. That's it, everybody. Oh, you know what? I have to coin you, all that stuff, right? After the close. I'm going to throw some links in there. Like I really should be doing more often, but I don't. And no specific order. My Substack, where you get my daily plan, you get me chattering in your ear most of the day through Substack or through WHOP, which is easier for us to admin. And we're trying to come up with a special that'll be only for WHOP, I think, to induce people to do that. It'll be a 3-month deal. Options depth, discount link. Basically, there's the link or DOC, all lowercase levels. And then Mentor Q, who has a lot of, I guess, generic stuff. By that, what I mean is, aside from having just SPX, they have futures, they have stocks. So if you just want something, and then they have this new thing, this Q query thing. You know, they just keep on coming up with all these new tools that, you know, I was involved with them pretty closely at one point. I guess haven't had the time, and they've kind of gone in their own direction. I stay SPX focused, and they're much broader than that. Good guys, they have good stuff. Fabio will be on here at some point talking about what he has. And that's it. So I put a bunch of links in there. Maybe one of these days I'll actually have the time to do it beforehand. Now let's take a last peek at where we are. And I suspect we're not far from where we were, and that we don't get far from where we were. Get it back here on a 15-minute chart. Here we are. And that's it. All right. Stay safe out there. Comments. Oh, okay. Yeah, the butterflies. Okay. Yeah, and I'll try and do more explaining or talking about butterflies and how I do them. Today's not a great butterfly day. You're welcome, Rick. Today's not a great butterfly day, but it's not bad because, okay, so what makes today a good butterfly day? If we think about it, we have two possible landing zones, here or here. So butterfly, you want to sell where we're going to stall-ish. Where we're going to stall-ish. So if we go down, we're going to stall here. So you want to maybe be long a 40 or 35 and sell the 25, or be a little higher, lower. On top, we're going to stall at 60, 65 max, 55 maybe. We don't get there. And that's what you want to, yeah, that looks much better. And so that's what you want to sell. You want to sell the volatility here or there. And that's it. Okay, I'm gone.